Smooth 98.1. This is Business Express. As always, it's interactive. We're talking about business, finance, and the economy. The WhatsApp number to get in touch and be a part of the conversation is 0809 440 981. You can also tweet at Smooth981. And don't forget, we are streaming live on our YouTube channel. It's Smooth981. So you can catch the live stream and post on there. This morning, we're talking about consumer goods sector. We have a special guest joining us. It's Nathanael Disu, research analyst, Afrinvest Consulting Limited. Good morning, Nathanael, and welcome to Business Express.
Hello, good morning. Thank you for having me.
Our pleasure. All right, so let's just start off with talking about the exchange rate. Now, the exchange rate at customs have fallen from a low of 1,624 Naira to 1,246 Naira. Reason for this?
Okay, yeah, thank you very much. So, like you rightly said, we've seen let's say decline or appreciation in the exchange rate
Nathaniel,
for customs.
Nathaniel. All right, can we start all over? Yes, because we couldn't hear you for a few seconds.
Okay, can you hear me now?
Yes, loud and clear.
Okay, so I was saying that one of the reasons that we've seen that led to the exchange rates for customs let's say appreciating from 1,006 about 1,600 Naira per dollar to about 1,200 is due to the recent activities that we've been seeing from the CBN in terms of policy reforms to help strengthen the Naira and to improve the exchange rate. So we've seen starting off, not in particular order, but over the last couple of weeks, we've been seeing some policy reforms by the CBN. We could remember how the CBN helped, how the CBN was able to readjust the BDC's operation in the country. Remember they kind of revoked the license of about 4,000 BDCs. So that move was to help curb speculations in the parallel market, which has seen the exchange rate decline for the past since the beginning of the year. So one of the things that we've seen in the BDC, and also they were able to recapitalize the BDC sector and making it into the tier 1 and the tier 2 BDCs, that the tier 1 BDCs they would need about 2 billion naira for them to operate in that sector. So those are part of the reasons that we've been seeing the exchange rates improve over the last couple of weeks. Also, we've seen that the CBN has been selling to the BDCs about $10,000 to the BDCs, I think in about 2 or 3 times over the past few weeks. So these policies has helped, has been part of the reasons why the exchange rate has been appreciating over the past few weeks, and that has also reflected in the customs. Also, we've been seeing the CBN resume OMO auction. They've been selling OMO bills for I think about 3 different times or so, and each of them rising to as high as 1.6 trillion naira, and a good percentage of those OMO bills came from foreign investors. So that has seen a lot of forex inflow into the country. So that's one of the reasons why we've been seeing the Naira exchange rates improve over the past couple of weeks.
All right, thanks for that. Now, what is the impact, though, on the price of goods that are coming into Nigeria?
So in terms of the price of goods coming into Nigeria, so like we all know, even if we go to our regular markets, we would hear that price of things has already gone up because of dollar and the like. So now that the exchange rate has been now that the Naira has been appreciating over the last couple of weeks, we're expected to see how that would have an impact into the price of goods and services in the country. And also the customs has also indicated, has given a report that there've been a slight decline in the volume of goods that has been coming into the country in Q1. As a matter of fact, this year, customs declared that there was about 5% decrease in the number of goods coming in terms of import, and that has been due to the fluctuations of the exchange rates over the last couple of weeks. So now that we are seeing the exchange rates stabilize a bit, is interesting to see how that would improve even in this quarter, this Q2 quarter that we just started. So it remains to be seen how that would have an impact in the coming quarter.
Okay, we are speaking with Nathanael Disu this morning, and would love you to be a part of the conversation. Yes, I know you're enjoying your holiday and all, but hey, the business never stops. 0809 440 981. That is the WhatsApp number. Nathanael, what needs to happen for the Naira trajectory to basically continue on this path that it currently is on?
Okay, thank you very much. So about this Naira exchange rate, it's something that everybody talks about, and people are still trying to question that how sustainable is this appreciation of the Naira? Is it a short-term fix, or is it something that is going to continue over the long run? So we've been seeing the monetary policy from the CBN, how they've been, will I use the word aggressive, or been trying to ensure that they do the right thing. So it's now left for the fiscal side to say, is now less for you to say how well the fiscal side matches the monetary side, because two of them needs to work hand in hand to ensure that the exchange rate is stabilized and also appreciate. Looking at the budget, for example, we have a budget deficit for 2024 about 9.2 trillion naira, and in terms of the federal government's projection is that crude oil production would be, from in terms of their budget, so they are benchmarking the crude oil production to be about 1.7 million barrels per day. So as at last month, OPEC released a report that Nigeria's crude oil production has declined to about 1.3 million barrels per day from 1.4 million barrels per day. So we are seeing a slight decline in crude oil production, and that would have an impact on our forex, because a large percentage of our forex is determined from that aspect. So it's now less for the fiscal side to see how they can match up. So in a nutshell, it's more like the CBN and the monetary policy have now taken the lead to help stabilize the Naira and improve the exchange rate. Now it's not less for the fiscal side to complement the work that the CBN has been doing, because if not, it should just be like a short-lived measure, and everybody wants a better currency, everybody wants a stronger Naira, but then both of them needs to work together to ensure that this appreciation of the Naira that we've been seeing over the last couple of weeks is sustained. And if that is not sustained, it would lead to a further decline in the exchange rates.
So how much assistance would you say needs to come from the fiscal authorities to support what the policy authorities have been doing, really?
So in terms of that, for example, we've seen how the executive were able to take some of the proceeds from the treasury bills auction and almost sales to help offset the ways and means debts that owed to the CBN. So now that we've been seeing a lot of OMO auctions coming in about 12 months, those bills, those OMO auctions would mature, and like about 40% of that came from the foreign portfolios investors. So they would want their dollars back in return. So it's a lot of work needs to be done from the executive part, because we've been seeing a lot of work on the monetary policy side. We've been seeing how the CBN has raised the MPR now to about 22.75%, and that high interest rate has been so much lucrative to the foreign investor. We've seen a lot of fixed income assets rise over the last couple of weeks. So that's on one side. The executive needs to complement that. And like I mentioned earlier on, crude oil production is still low. So they need to ramp up crude oil production and also improve on export duty. So if all those are put in place, if all those are also put in place with the foreign portfolio investors that we're seeing coming in, that should help stabilize the Naira over the coming weeks or months.
All right, thank you for Nathanael for breaking that down. Now let's look at consumer goods. How would you describe the health of that sector currently?
Okay, so for the consumer goods sector, we are seeing that the consumer goods sector is still, let's say, coming to terms the um, with the Naira unification that policy that happened last year. We could see from the audited financial statements of major consumer good companies, they recorded huge losses, huge profits over the year, and that was largely impacted by the FX losses that they incurred for the past year. A lot of them recorded hundreds of billions of Naira in terms of FX losses. So what we are seeing now is that these companies are trying to say, so from the policy that we saw last year, we don't expect that to have much impact on the consumer goods sector this particular year. And that is also one of the reasons why we've seen the consumer goods sectors as being one of the best performing sector in the NGX this year. As a matter of fact, the consumer goods sector has even outperformed the broader all share index. So what we are seeing in that sector is that investors are kind of, will I say, reallocating funds, because last year the consumer goods sector didn't do well in terms of, because of the policies from the exchange rates that had huge impact on manufacturing and even other sectors. So now that we are now seeing investors coming into that sector, and that has led to the rise in share price of major consumer goods sector. So, and also the past week we saw the policy from the Electricity Regulatory Commission, how they raised electricity tariff hike and the federal government moving subsidy. So that would also have an impact on the consumer goods sector, because they are need to a lot of energy for the production as well as other companies. So those are the things that we are seeing at this moment.
All right. Well, that is all the time that we have this morning, Nathanael. So thank you so much for being here with us on Business Express this morning.
Thank you for having me.
And our special guest was Nathanael Disu, research